Hello everybody, this is Silverbusters, and today I'm coming at you with a video that I'm calling just like a basic silver buyer's investment guide, and not just for one particular situation. I'm going to try to approach it from different age groups, different levels of income, different lifestyles, and just, and take the knowledge that I currently have and then imagine if I was in one of these other positions of life, what would I do first? Knowing what I know now, and placing myself in those different lifestyle circumstances. So basically, you have to imagine that you're on the silver train. You realize the corruption of the governments, kind of the worthlessness of holding U.S. dollars over the long term, and you know we're in for some kind of currency reset, some kind of devaluation, whether it's just a meaningful inflation, like it doesn't have to be hyperinflation. It could be, say, 10% real inflation for 5 years, right? Well, if you know the law of 72, it's a really easy way to do these math problems. If you take the inflation rate and you divide it by 72, that's the number of years it takes for something to double. So if you take 7% inflation for 10 years, or you take 10% for 7 years, something along those lines, you'll half the value of your existing money, just by, those kind of modest, and that's not hyperinflation. Hyperinflation is where, you have monthly rates of inflation that high. So it doesn't take a full-blown civilization collapse for this thing to realize itself. You have to realize that there's a scale of crisis, and it doesn't take the end of the world scenario to make gold and silver seem like a good plan for you going on into the future. So let's say you realize all this and you're on board, and you're someone, and we're going to start with people who don't have any hard assets. They don't have any gold, they don't have any silver, they don't have any stablecoin cryptocurrencies, they don't have any of that kind of stuff. They might have, depending on who we're talking about, they might have a house, they might have a 401k, they might have an IRA, they might have some kind of stock portfolio that they have, but they probably don't have any meaningful amount of gold and silver. And just going to preface this with, this is not investment advice. This is just my opinion of what I would personally do if at this later stage I was coming into the game and imagining myself in the shoes of different people, and then thinking, well, how would I go forward from this point if I had to start over? And hopefully that's a useful exercise for some of you who are newer to this, after all of the excitement that's been generated and the knowledge coming in from the whole Wall Street bets incidents, and the Wall Street silver offshoot groups. There's a lot of new energy out there, and so I'm thinking, well, what would be useful for these guys? And this is what I came up with. So first, let's imagine probably the largest group of people. Every once in a while you'll get those generic newsline headline studies where they say X% of Americans can't afford $500 emergency expense, right? From their own savings, which basically means, and usually it's something like 40-50% of the population when they do the survey. If they need new tires on their car, if they need a new refrigerator, if they need a new washer dryer, if they have a surprise medical bill, any of those kind of expenses that are going to pop up. Generally, it's something like half the population can't afford that without whipping out a credit card or going and begging for currency from relatives or something along those lines. So imagine you're in that group of people. You're living that lifestyle for whatever reason, but you come across this knowledge about gold and silver, about the economy, about the inevitable decline of fiat currencies. Well, what do you do if you're living that sort of lifestyle and you realize the system isn't long for this world, right? Well, it's kind of good and bad at the same time. The good part is that you don't have a ton of investment. You're not invested in the system, right? You don't have a ton of investments that are tied up in slow money kind of 401ks or mutual funds that are tied to your job. You don't have an emotional investment in the current system because you're just barely slinking by day. So if the system radically changes, yes, it will be a major adjustment for you, but you're probably not going to be the guy who jumps off a skyscraper because they lost everything in the transition to the new system. Because let's be honest, you don't have that much to lose, right? Losing 100% of nothing is still nothing. So even if what are you going to lose? Your whole paycheck if it's a Friday night and you just got your paycheck and they reset the currency over a long weekend or something like that. Well, I mean your whole system that cash that you lose is a 2 weeks pay, right? Something like that. What it is going to factor in here is this is going to be accompanied by hard times generally. We're not going to immediately head into an economic boom right after a transition to a more sound method of currency, because it's going to take time for these systems to sort themselves out. Well, I don't even know what the system would be tomorrow if it were to sort itself out. There may be multiple failed efforts. Like there's already this kind of elitist Great Reset kind of information that's being spewed out right now, and that's what the elites want to offer in the collapse scenario. But most people who look at it kind of laugh, like who is going to accept this system where the elites own everything and you just rent stuff from them? It's kind of like their fever dream of what they would get off to if they could just author the world exactly the way they wanted. That is what the whole Great Reset narrative that's out there from the Davos crowd is. And so it might take, and we don't know the time frame, you might get that failed effort and then they get 6 months into it or a year into it and they realize, that's not going to work because all the systems keep crashing and people aren't buying into the new system and the numbers aren't picking up. And so they go into a new system, and let's say they revalue the dollar and they revalue gold and they revalue silver at some higher number, but maybe that number isn't high enough, right? And so a bunch of people come in an initial wave and put their gold and silver in the treasury, but they haven't learned their lesson and they haven't stopped the debt spending and they haven't given up on their crazy socialist utopia ideas, and they're still spending way too much than the system can support, and then they have to come back a second time or a third time, or maybe by then outside forces are completely dictating what the system is going to be, and we've gone to some kind of decentralized tokenized precious metals trading as a cryptocurrency or something like that, right? Who knows, with all those variables in there, what it comes out to. So you have to be prepared on multiple levels for this extended period of unclear kind of bad times for the average Joe, which is who we're kind of talking about, that big group of 40 to 50% of the population who can't afford to put new tires on their car without whipping out a credit card, right? That's who we're talking about right now. So what I would do if I was in that position, and I was younger and I was in maybe not quite that dire of a position, because I was always inclined to save the vast majority of my currency. When I did earn money, I've always been kind of defensive minded. So one thing is you're going to need to get more defensive minded about your personal finances. So why are you in a situation where you're spending most of your money on just getting by? Are you spending money on useless bullshit? Are you wasting money on booze and cigarettes that are way above your grade to be buying? Are you pretending to sustain a lifestyle that's way past your income? Are you spending more than half of your money on rent? That is just a no-no. Rent or house. You're putting yourself in a socioeconomic class and trying to put forward a lifestyle, an image of a lifestyle that you can't really maintain. So you might have to come back down to earth with your lifestyle. And that might be cutting back on luxuries, getting rid of bad habits, maybe not trying to show off to the opposite sex as much with your vehicles and clothes and parties and nights out and that kind of stuff. A big chunk of this is going to be surviving the bad time. So you need to become a resilient enough person and be able to store enough excess energy that you're not one of the people that has to fall in line with the elitists, that has to be dependent on government assistance, that has no choice. No matter, if you're 100% dependent on the government, you really don't get an opinion on what the government does, because, they're like your parents, and you're living at home with them and they get to call the shots, and you don't have any realistic alternatives because there's nothing else you can do or nothing else that you've taught yourself to do to get out of that kind of paradigm. So, that's the first thing you'd want to focus on is self-improvement before the storm, because you can't invest in anything if you don't have excess resources, and you're going to be in a situation where it's going to be harder to get a job, not easier, especially for the short term. I do think long term things are going to get better for Joe's six pack. We'll call that this group of people, but you're going to have to get through the winter to get to that other side. And I'm not talking about a 3-month winter. I'm talking about something that might be multiple years in length before we get to a new system that is semi-stable and leads to an improving condition of lifestyle for the average person. So let's say you can take some of that to heart. You realize, shit, I really have to change what I'm doing in my life. I'm going to have to save a bunch of more of my income. I'm going to have to lower my expenses. I'm going to have to cut back on my luxuries, and I'm going to have to focus on basics and getting through this hard period of time. With that extra money that you are now saving every 2 weeks or every month, what should you do? Well, my first advice would be to buy physical silver. And since you're probably not going to have a tremendous amount of money, maybe you can put away a few $100s a month, right? Extra on in the form of savings. And you shouldn't just be investing in gold and silver, because there's always a cost for buying it, the premium cost, and then if you have to sell it for necessities like food or gas or a car to get to a job or something like that, you're going to lose a piece of that premium selling it again too, right? So you don't want to find yourself in a situation where you buy silver with your savings and then immediately, a few months down the road have to sell it because you lost your job, or the government checks that were coming in are no longer coming in for you for whatever reason, or inflation is so high that it's the same thing as the checks not coming in. It's essentially, the government check is still there, but it's only buying half as much gas, half as much milk and bread at the grocery store, right? That's the kind of situation you might find yourself in, and then you'd have to turn around and immediately sell the silver that you had purchased. So, thing, first you really want a stockpile of basics in your home. The kind of stuff that you would want for a natural disaster. And it doesn't matter what part of the country you're in or what part of the world you're in. There's some kind of natural disaster that you're going to be exposed to, whether it's hurricanes, earthquakes. I'm down here in Texas, and we had this crazy ice storm thing, and it's worse up north, right? But we're just not prepared for it down here. You want food. You want a way to cook food, even if you don't have electricity. You want stored water, because the rule of threes, right? 3 minutes without air, you're dead. 3 days without water, you're dead. 3 weeks without food, you're dead. So those are the things you need to focus on first. Canned food, shelf-stable food, stuff like rice and pasta that's going to stay good a long time, and a way to cook it, and water, and a way to purify water. If you are having to go out into a ditch and get some water, you want an easy way to purify that. So basically, you're doing prepping work at this point. You're prepping in basics. You're getting your toilet paper and your food and all that stuff lined up beforehand, so you don't have to be one of those dumbasses running out in the middle of the COVID storm trying to get the last package of toilet paper, because you've already done all this. And you don't have to rush out and spend your hard-earned silver on those basic necessities in the middle of the crisis, because you've already stocked up, right? So let's say you do that. You've got a decent stash of food. We're talking, enough to get you by for a few weeks. You're going to need more if you got family members who depend on you. And it sounds like a lot, but if you get every time you go to the grocery store, if you get a 10-pound sack of rice extra on top of what you normally use, and put it in a 5-gallon bucket and just don't open it, you can, if you go to the grocery store once a week, you can come back with a really cheap, really basic food stock. And yeah, you might only have rice to eat for a period of time, but it assumes you're going to be doing some kind of hustling during the period to throw something else in the pot with that. I'm not telling you to go out and buy a bunch of money on professionally freeze-dried foods, because we're talking about the lowest economic group here. The can of Beanie Weenies and a camp stove is more realistic in these situations, right? Because then you can cycle that food and actually eat it and not have it be a waste. I'm guilty of buying reserve food and forgetting about it, because for me, I had the money to do it, and I wasn't worried about it, and it was only there for a real bad crisis, right? But ideally, you want to get stuff that you're going to cycle through anyway, so you can go grab the old stuff and then replenish your stock when you go to the grocery store in the future. That's what I'd tell people to do first. So, but you've got extra money on top of that. Well, what are you going to get? Well, I've got a couple different, and I have no affiliation with these guys. I've got a couple of different precious metal sites up here, and what I would get is silver first, and then basically, I don't even know if they have junk silver on this website, but junk silver is a term for old US dollar currency before 1964. And you see here, it says 90% silver. That's because they put a little bit of copper in them to make them hold up better against wear and tear, because this is what your grandpa and grandma used as currency. This is what they used to, why they could buy a candy bar for a nickel, because a nickel had silver in it, or at least it did during the war. But basically, this is some of the cheapest small denomination it's like, if you have to go to the store, or you have to trade something, you need something of small denominations to trade with, to barter with, essentially. So you can stock up on whatever necessities that you need, or if you want to accept payment for some of your necessities that you stockpiled up on that you want to trade to somebody, you need to be able to identify this old currency. And usually it takes the form of dimes, quarters, half dollars, and dollars. And you're looking for before 1964 on the dates, and the total $1 face value of old silver coins, US silver coins, has, I think, 0.71 ounces of silver in them. So I'm not 100% sure on that, but I think I'm in the ballpark there. I think it's around 0.7. So you should be able to do the math on your own on what the premium is right now. I know premiums are crazy right now, but this is realistically the best starting point for anybody that is investing in gold and silver. And this is the kind of stuff that you can throw in a go bag. You know, we're still kind of not even in the investor phase. We're in the prepper phase. So if you have to go on the run or you have to go looking for extra necessities, this is going to aid in your survival, not necessarily in your investments. You know, this is going to get you through those dark days and be the easiest to trade during those dark days. And this is called junk silver or constitutional silver. And let me pull it up on SD Bullion. Yeah, here we go, 90% junk silver. And you'll see the bigger quantities they have on here. They have silver dimes, silver quarters, and there's different, over the years, they've had different patterns. So you got to get familiarized with these. You've got half dollars, you've got some with Kennedy, you've got some with the Walking Liberty lady, and you've got some with Benjamin Franklin on them. And so this is where I'd start, and unless the let's do a quick I mean, it takes so much math to do this, but we're going to do one math problem anyway. So we're looking at $10 face here for 256. So $10 face is, let's see if they do the math for us. If we go in deeper, I think they do. See, then it's not even in stock here. Metal content is, yeah, so I was right. $10 face is 7.15 ounces. So if we take $10, that means we're getting 7.15 ounces of silver for $10 a face. So we're going to divide that by, we're going to do it the other way. We're going to do $256.62 divided by 715. And that brings us to $35.89, which is, you know what? At that premium, I might look at 1 ounce rounds first. Because when I was buying them, the premium was not quite that high. But if you can do the math on the premium here, which isn't, I was able to do it. This is basic math here. I would not pay $9 premium for junk silver, even though I really like it as a first. I'm going to contradict myself here immediately as a first purchase. And maybe that's just one product, and maybe it's different if I go to Ampex. I don't know. We're just going to do a little due diligence here. Yeah. I don't even know where to go in here. Silver coins, junk silver. Here we go. So, yeah. 90% silver, $1 face value. That's even worse, right? That's an even worse price. That is one of the pitfalls, is you're going to have to do the math right on these to tell whether you're getting a good deal or not. So remember, the 0.715 per dollar face value is ounces of silver, and you'll be able to calculate that. So even though I like it, I don't like it at a $9 to $10 premium. Especially when you've got other options. So we're going to go into the next option, which is 1 ounce silver rounds, in my opinion. So we're going to go look at silver rounds. And I was impressed by this the other day. Let's see if it's still the same thing. You know, if I had money still, $31.18 or $31.34. And let's do the math right now. So if, let's say we can, and since we're Joe Blow, let's say we can only afford 10 at a time right here, because we're only getting, say we're getting $300 worth, right? So 3169 minus the current silver price, which is listed as 2668. That's 501. That's still not great. I've seen it for less than that. But I think that's about as good as you're going to do right now. I mean, let me check SD bullion. SD. We're going to go to silver rounds. This is generic silver. This is not from a government issuance, but it's going to have some kind of pattern on it. So 31.39 versus 31.69, 31.39. Yeah, it's still not that great. It's about the same category. But that's the world we live in right now, is that $5 premium on physical is about the gate of entry, right? That's the entry price. So if I can't get constitutional silver, if I can't get junk silver, these 1 ounce rounds are going to be probably the most common thing you run into, because they're way cheaper than the government issue coins, the Eagles and the Maple Leaves and the Cougarans and that kind of thing. The premium you pay on for these is still going to be significantly less than the premium you pay for the government issue coins, which is why I wouldn't recommend them first for somebody who's just trying to trade for necessities. Because let's face it, you're probably not the person you're trading it for is probably going to rely not on collector value. They're going to figure out, is this a hunk of 0.999 silver? And if it's real, I'm going to give you a price for it. You might catch a little bit of a premium for an Eagle or a Maple Leaf or something like that, but only really from a dealer, right? If I'm a guy behind a counter somewhere, and I'm learning about silver, you may or may not get that premium back if you're trading for gasoline or groceries for your 1 ounce silver rounds, right? And you can find half ounce rounds, but again, the premium just kind of jumps up again. So those are the two products I would suggest for Joe 6-pack with no income, not no income, but no savings really, and the kind of self-improvement work that they need to do in order to weather this economic storm we're getting into, and then basically do prepper work. And once you do that prepper work for long enough, and you've maintained that lifestyle of adjusting what you're getting into, and you're used to living on 70% or 50% of what you bring in, you're going to turn into a real stacker, which is what I would call the second phase. Is you're getting into this, you have solidified your lifestyle where you're consistently living on less than what you are bringing in, but you're bringing in paper dollars, right? US dollars, and you want to invest them, and you're not tied up in the system. Say you're a younger person and you're not tied up in a 401k, you're not tied up in the stock market or anything like that. Just keep stacking these 1 ounce rounds. We can go look at other stuff. Let's see if the bars are actually trading, the small retail bars are actually trading for less, right? So we go over here for 1 ounce bars. SD bullion bar is still high. That's about the same. This generic Sunshine Mint bar is about the same as 1 ounce rounds, right? So that's not especially great. Let's see if we go to a bigger quantity, if a bigger size, can we get a discount on the premium? So here we're looking at 31. That's still basically the same as what we were looking at 1 ounce rounds. And that's really why 1 ounce rounds are my favorite. Because, now I'm looking at a 10-ounce bar here. I'm not seeing a big kickback for getting the 10-ounce bar. And as you get into the bigger and bigger bars, the risk that you're getting counterfeit stuff shoots up. So let's look at the 100-ounce bars. 100-ounce bars, that's not any better. 313, that's not a better premium. So right now, it just may be that the premiums are so in such a spot that there's nothing we can really do. I mean, we'll look over here at 100-ounce bars on Silver Gold Bull just to do our due diligence, right? Due diligence. 100-ounce bars. Yeah, 3131. And that's if we're buying a bunch. We're probably not buying a bunch. And all of these are higher. 3.2, 3.1. I kind of like that pattern. That's kind of cool art. So I can't really recommend the big bars right now, unless you just want it for, if you already have a bunch of the small stuff and you have a lot of money to crank in at once, maybe you can suggest it, but they're really not offering any advantage over the 1 ounce rounds right now. And if you had to choose between 100-ounce bar and 100 1-ounce rounds at the same premium, I pretty much would take the 1 ounce rounds every single time because they're harder to forge, they're easier to trade. Both of those reasons just make them more preferable than the bars. The big bars are usually for people dealing in big money, right? So let's get past stackers and Joe Six-Pack. Joe Six-Pack turns into a stacker once they are saving money regularly every month and investing in hard physical assets. And another reason why I prefer silver over gold is those same reasons, that it's easier to trade. Gold isn't a bad investment right now, but you're going to have to spend almost $2,000 or $1,800, something in that range, for one 1 ounce coin. And what are you going to do with it? Unless the one category is if you think you're going to have to bug out, leave your residence, leave everything about your life behind you, and want to have a highly portable form of concentrated wealth, then you could get gold, because you can hide gold, you can sew it into your clothes, and one little tiny amount of gold is going to just be easier to carry with you, because right now you need something like 65, 70 ounces of silver for 1 ounce of gold, and I don't expect it to remain that way, but it's a lot easier to carry. So if you see yourself having to flee on foot or in a very short period of time, and you're not going to have time to move all of your stash, maybe you go for gold over silver, but you just have to realize that when you do that, you're going to have a harder time getting a fair trade back for that gold. You may have to find a dealer who actually wants $2,000 worth of gold, because you're not going to get $2,000 worth of groceries or $2,000 worth of gasoline at once, right? Doesn't make sense. So, not that gold isn't good, I just don't see it being good for the initial Joe Six-Pack and stacker categories that we've been talking about. So let's move into a group of people that have come to the same realization about the system that we're in, but they're more middle-aged, they're more established in their jobs, they probably have an IRA, they probably have a 401k that's attached to their job, maybe they're getting some kind of match for that, they're invested in the system. So what did these people do now having realized the situation that they're in with what we've talked about previously. We're going to go through this great transition. A lot of your investments that you have are either not going to be honored. Somebody at the brokerages are going to run off with your stocks, or your stocks are going to be rehypothecated, and there's going to be multiple claims on stocks for more outstanding shares than real shares that really exist, and that's going to dilute the value of your stocks. Your bonds are going to be depleted by interest, rising interest rates if that happens, or the rate of inflation. You're going to lose. You might get repaid for your bonds, but you're going to get repaid in toilet paper money. So you're going to lose half or more of the value of those bonds, and the interest they're giving you is piddling anyway. If you look at a 10-year treasury bond right now, which is kind of a benchmark, everybody was making a big deal because it was making a run up to 1.5% for locking up your money for 10 years. And think about that. The inflation rate every year is above 1.5%, even, and sometimes it might be 1.3, but that usually is a bullshit government number, and the increase in real necessity items is actually higher. Your food, gasoline, healthcare, housing kind of category is usually higher inflation than all the junk that they throw in that you could do without if you had to, right? You could put off buying a new computer for a year. You could put off buying a new flat screen. You could wear raggedy clothes for a period of time, but you can't stop eating, and you can't stop heating your house, and so on and so forth, right? So to refocus, you've got this big bundle of assets. It might not be huge. It just might be what you've managed to invest. You might be a 30 or a 40 or a 50-year-old, and you've got some capital saved up, right? But you've got it in the wrong categories because, your stocks might increase in value, but the Venezuelan stock market has been one of the best performing stock markets, but it's also because their currency went to absolute shit, right? So if your stock portfolio goes up 50%, but it's valued in a currency that loses 90% of its value, yeah, you have more funny money paper, but when you try to cash that in for real goods and services, you've lost purchasing power. So it doesn't really matter that the nominal number has gone up. Your stocks are going to underperform unless you're, what's his name? If you are Peter Schiff and spend all your days trying to isolate the exact foreign countries with the exact foreign currencies that aren't going to be devalued first, then maybe your stocks will keep up compared to the US dollar. I'm much more in line to think that if the United States goes, most of the people connected to our system are going to go, and that's almost everybody. The Chinese are, maybe Russia is out of it, and maybe, and I don't know who else, right? Who isn't affected by the US dollar in some sort of way. Maybe the Swiss, I don't know. Are they sitting on a big pile of gold and silver and don't give a shit if the US dollar collapses? Maybe that's the case. But they also live on a mountain range, and I can't expect that that they can produce all of the resources they need in that, or have come accustomed to using in that territory, right? So you're a 30, a 40, a 50-year-old, something like that, not quite retirement age, and you've got some investments, but not the right kind of investments. And you come into this realization that, oh shit, these investments aren't going to help me in the initial stages. Well, first, you do need some physical. You need to take some of the steps that I mentioned before for the Joe Six-Pack and stacker categories kinds of people, because you do need that barterable silver, easy to trade silver, if we get to an emergency situation wherever you're at. If the payment systems go down, if the electricity goes down, if you can't make payments through credit cards, you're going to need some kind of easy change on hand. So you're going to need some junk silver or some 1-ounce rounds or something like that that you can barter and trade with. And there's nothing wrong with stacking 1-ounce rounds. I think it's a great thing to stack. If the quantities calm down on some of this stuff, you might look into the bigger bars like we're looking at here, because the whole theory behind these bigger bars is they're supposed to give you a better premium, right? You should be able to get them more ounces because it's less work to make this one bar, right? There's less manufacturing and processing involved in getting this bar that's 100 ounces made for you. So if you're having to reallocate your 401k or your IRA and you're trying to get it into silver, or right, you're going to be talking about, if you're lucky, tens of thousands of dollars. And you can put tens of thousands, if not hundreds of thousands of dollars worth of silver into a small safe, a relatively small safe, right? But you're going to stack it easier if you do it in bars, and if you have to move it, it's easier to do it in bars, just marginally. But the idea is you're getting a better deal. You're getting more silver for the dollar. And so after you get your change, you might just stack some of these bigger bars. You're going to want to get them from a reputable source, and you're going to want to test them. Some of the ways you can test these is with a magnet. If you have a really strong neodymium magnet, somebody said they sell them on Amazon. I saw them myself there. Also, you can get them out of old hard drives. So if you're in a post-apocalyptic scenario, if you find an old hard drive and you can break it open, you can find a strong enough magnet in there to test real silver versus something that has base metal in it. So, and really what you're going to need to do is you want to have on hand real examples to test them against, because if the reaction you get, you're going to get a variety of reactions in different forms of silver, because the silver, you may come across foreign currency coins, you may come across 90% coins, you may come across 999 silver, you may come across gold. So you're going to get slightly different reactions. So what you want to do is take one that you know is legit, rub it up on this magnet, see how the magnet affects the one you know is good, and then test the bad one, right? Or the one that you're not sure about. And if it acts the same way, you're more comfortable with it being legit. And so that's one of the things you can do to help test these 100-ounce bars. Another thing that you can do, I guess you could try. I don't know how you do it. You can do a ping test, which is to just like drop it on a hard surface, drop it on a tile floor. I wouldn't recommend the 100-ounce bar, but you can do this with like a 1-ounce round, right? And it will ping. It will make this kind of beautiful high-pitched sound that you will not get from a from a base metal coin. With a base metal coin, you'll get a kind of dull thud that like pop, right? And with the silver, you'll hear a ping. I went to my uncle's wedding, right? And somebody busted out the ring. The ring bearer dropped it on the handoff, and when it hit the ground, it ping. It made the ring. And so when I was joking with my uncle, I went back over him and said, well, at least I know you got a good ring, because fake rings don't make a noise like that, right? So that's the other trick that you can do if you're going to buy silver in that kind of form. But we're talking, the main thing that this group of people is going to have to do is they're going to have to shift assets. They're going to have to make big decisions about how comfortable they are with reallocating the current investments they have versus just putting new income into gold and silver. You have to do the research, and you have to get in your head, how much do I want to keep in the system? How comfortable am I with my current investments, how much confidence do I have in those current investments based on the research that I've done and the new knowledge that I've gathered about the fiat dollar system and the trajectory that it's on? How comfortable am I with keeping those sort of assets in the system that I don't have direct control over? I'm going to tell you, I don't like 401ks. I used to contribute to one a long time ago, but I don't anymore. I think I got rid of them 2 jobs ago, and by now, it's all in silver. And the reason why is you are slow money and you are dumb money when you are in a 401k, because you cannot withdraw that money through any sort of easy method. You might be able to go through some sort of elaborate government process like they did for COVID and let people withdraw against their 401k, but that's only if the government wants to allow you. If the government gets freaked out about capital flight, about money coming out of the markets, they're not going to allow you to withdraw off of your 401k. In a normal process, you're going to pay a penalty, you're going to pay some kind of 20% fee, or you're going to have to take a loan out against the value of your 401k and pay somebody interest on your own savings, which is just ridiculous. And a lot of these things lock you into holding maybe a variety of 5 or 10 different plans, all of which are bullshit and all of which are going to perform really, really bad because they're generic cookie cutter portfolios that are designed to be there for dumb money, so that the big boys can trade around you. That is the truth about 401ks and mutual funds and those sort of middle class kind of job sponsored investment plans and IRAs. And maybe you have a little bit more flexibility with an IRA. I'm not one of these experts where you see all these ads about you can get gold and silver in your IRA. Yeah, but how many of those let you be the custodian and let you hold on to the final product, right? Most of those people are going to steer you into some sort of final product that you don't actually hold the gold and silver. So you might think you have exposure. Well, my IRA is in precious metals and it's held by Joe Blow, Joe Blow's vault. And well, if Joe Blow's vault is rated by the government, or if Joe Blow's vault is a bunch of fraudsters and they're running some sort of scheme where they don't have all the silver and gold on hand that they say they have, you are out of the loop already, right? So if you don't hold it, you don't own it. You have to decide, is my hedge a real hedge if you just pull a portion of your 401k out and put it into one of these IRA plans? There are some out there that will let you be your own custodian. And if you want to go that route, I suggest you do your own research on that. It's a lot of paperwork. There is a cost to set it up, but it is possible. And you're going to have to tell some people to go to hell while you're doing this. And this is a really important, because they're going to steer you the wrong way. I'm going to tell you what happened to my mom when she tried to do this exact same thing, right? She inherited an IRA from my grandmother, and it was a significant amount of money, but not a life-changing amount of money. And it was in an IRA. And my mom's like, well, should I just keep it? I'm like, you need to diversify, go turn it into a self-directed IRA. And she went through all the processes. And it was a lot of work for her. She ended up regretting it. Maybe if you're more diligent about it, you can do it. But she did get real gold and silver in her hands. But you have to watch out. Because if you make a bad buy, and a bad buy would be like getting lured into a semi-numismatic product. And my example for a semi-numismatic would be, I don't know, something on here. Let's find some bullshit on Ampex because they've usually got it, right? So we're going to get in here and find pandas. Okay, here we go. This is a semi-numismatic product. $38.39, right? So that is a $12 premium right now, right? $12 premium over spot. And there are worse ones. I had my mom was lured into buying some kind of half-ounce Canadian product that by the time you looked at that markup that they put on it, it was almost 100% markup on the silver, right? So you have to watch out. If Joe Blow takes his first $300 and buys pandas and then realizes his mistake later, he can just go with his next paycheck and buy 1 ounce rounds and not have lost a whole lot. But if you take a big chunk of money out of your nest egg, your 401k, your IRAs, and you get some selfish dealer that puts you into one of these semi-numismatic products, which is more like collecting stamps, right? They say, oh, this is worth more because it's rare. Bullshit. Take those people and say, I don't want baseball cards. I don't want postage stamps. I want bullion. I want silver, and I want as much silver as I can get in a useful form to me. And I don't really care about the art. The art is pretty, is wonderful. If you want to buy some of these and give it to your friends on their weddings, do that. Or when they have kids, it's beautiful. I do that kind of stuff. But for your stack, this may not be the best choice for you, and especially if you are moving tens or hundreds of thousands of dollars out of your core savings because you've decided to make a big bet on it. You want to go to generic products. You want to go to the 1 ounce rounds, the bars, the generic stuff, maybe government bullion. I don't know if you can get Eagles at a decent rate right now. I mean, what are Eagles right now? U.S. Mint, American Eagles. So I go in here and I want to view all products. 39 for U.S. Eagles. So that's not any better. Even 38.9 for a random year. That's because people all pile into it and think there's something special about it. I'm going to tell you, if you come to me, you're not and want to trade in a Mad Max kind of crisis, you're not going to get that extra $5 out of me. Difference between the generic rounds and the Eagles. Especially because there's easy ways to tell if they're fake. You don't need a U.S. coin to reassure me that it's not fake. And there are fake Eagles, right? So you have to be extra careful when you're moving that big amount of money the first time, because you are at such big risk of falling into one of these traps that you have to be extra cautious. Get 1 ounce rounds. Get generic products, get as close to spot price as possible. And right now, as close as possible might be $4 over spot. It might be $5 over spot, because that's how far along down the process this has gone. As a veteran stacker, I remember when I could get it generic 1 ounce rounds for 49 cents over spot, right? But those days are gone. You know, we may get a period of time where you can come back later and get lower premium stuff. It's possible, because I can't predict the timeline on which this stuff is unfolding. Nobody can. Nobody has all the information. Nobody can tell you when this thing is going to go full blast and you can't get anything anymore at all. Or are we going to have another pullback? Is it going to pull back to 20 and our premium is going to come down and we're going to have a calm period? I don't know. I just know what the long-term fundamentals say. The government is on a path where they are spending way much more money than they produce. Some of the crazies have gotten into the MMT situation, and they think they can spend as much money as they want without affecting the economy, and they're full of shit. They're just following the same historical path of all of these other people that all these other nations in the past that have come and gone have printed more money than their economies could sustain, and they have ended up destroying their economies and destroying their currencies in the process. And it's arrogance to think that we're immune to this process. So as long as you look at it as a long-term investment, it really doesn't matter whether you buy it at 30 or 25 or 20, because if the hard times come, if the year comes, you won't care. You'll make a little bit more on your investment, but you'll be glad that you have your savings, right, in something tangible. Do you consider gold when you're doing this? Yes, you consider gold because you can get a lot more gold, and some of the premiums are more reasonable. So, like if we go look at a 1 ounce gold, let's say, what's a gold eagle going for? A gold American Eagle. And we go view all products. So our markup here versus gold. Remember, it was almost, what, $12 or $13, almost 35%, something like that markup for a gold silver eagle. For a gold eagle, it's what? That's what, 150? 200? Not quite 200, right? So that's closer to 10%. So you may not get the upside that you would get in silver, and you're not going to trade it as easily. That's, like I said, do your prepping kind of stuff first, have your change on hand, your small silver on hand for that kind of stuff. But if you want to look at, as an investment, I prefer the other stuff, but if I had millions of dollars or a high number of hundreds of thousands of dollars, I couldn't see not getting into some gold too, just because, like I said, if you want to get out of Dodge with a bunch of money quick, you're going to want it in gold, and it looks like you can dodge some of the premium. I do think silver has way bigger upside coming than gold, but definitely better premiums right now on the gold. And platinum is viable here too. Let's see what we got here. So we've got platinum. The markup is pretty bad though. That is 25%. It's pretty big markup. So you got to consider you're trading upside potential for the initial versus the initial cost to you in the form of the premium, right? So that's the trade-off there. You're also going to be able to store it easier if you have a vast amount of money. I mean, if you're married and 50, right, and you have two people who've been working on all their lives and they've been semi-diligent, you might have a pretty big nest egg to develop. And you might not want it all in silver, just because of the size issue. But personally, I'd put at least half, probably more than half, in silver anyway. Or you can dial it in. You can do it in chunks if you're not comfortable doing it all at once. But I would diversify, because housing prices probably will go down. Because the main reason that housing prices are elevated right now is because of access to subsidized loans. Cheap, artificially low rates on mortgages have allowed there to be more buyers than in the market than would be there in normal economic situations, right? So if you've got more buyers competing for a limited resource like real estate, like housing, and then there's this crisis, right? And those government-sponsored, government-backed programs that are handing out loans to people who would normally qualify for them disappear, then what happens is a lot of buyers aren't going to be able to afford your house anymore. Now, if you're just going to live in your house and continue to live in your house, you're probably okay. But if you're looking at it as a rent house or as an asset, initially you're probably going to see housing prices go down. At least in real terms. They might go up in nominal terms because of inflation, but in real terms, they're going to lose value because the number of people who can afford those things, those homes, are going to go down in any kind of economic crisis. There's also going to be a lot of people who are forced to sell because their assets in other areas have not performed well. They've lost their job. They're running into this economic crisis, right? And they're going to be forced to sell their homes and downsize or go back to renting. And that's going to put a bunch of supply on the market. At the same time, the number of buyers is going to crash. So you're going to see this decline in real estate. So if you're somebody that has a bunch of your money in real estate, you're going to want to look to immediately diversify as much of that as you can, unless it's literally land that you live on or you're holding it and you're going to weather through the other side, because something like farmland is probably going to go up in value because it's the means of production. It's not consumption, right? A fancy house is at its core consumption, right? Whereas farmland is part of an industrial process of making food and making something productive. So that will probably still see an increase in value, whereas things like fancy homes will see a decrease in value when we enter this economic crisis period during the reset that we're going into. So all of this that we've gone over applies even more to people who are near retirement. And this is going to be the hardest, who are either retired or near retirement, to hear these kind of messages, right? Because they've lived their whole lives through the system. They believe they've earned benefits in the form of a pension. They believe that they've earned benefits in the form of Social Security and medical benefits that they've earned through paying into these systems through their whole life. And if you've seen the images of after the fall of the Soviet Union, you get these guys who are Soviets who are just dumbstruck by the fact that communism has collapsed, right? And they're walking through the streets with a picture of Stalin trying to bring back the glory days, right? So that's the danger when you're dealing with a revelation like this for the people of the older generation, because they may come to the realization that their whole life they've been lied to and that they're going to be fucked. They're going to be screwed on their pension benefits. They're going to be screwed on their Social Security. Yeah, the check might come, and the number on the check might even go up. But in terms of when you take that check to the grocery store to buy your daily necessities, what is that check going to give you? And it's going to be way less than was promised by the amount of money that you paid into it your entire life, right? And so all of this information is very tough and very dangerous for old people who have lived most of their life and invested in the system, because there's not a lot you can do to get your Social Security money back. I have made my peace with the fact that that's just another tax and there's nothing I can really do about it to get it back, right? Whereas they might think they're going to rely on it. I have no such illusions that I'm going to rely on my 401k money. I mean, on my Social Security money. It's just not going to happen. Plus, the older people are more likely to have the most money tied up in the system. The good thing about being retired is you probably are able to access that money better than a middle-aged person with a 401k. You can probably get out or move your retirement funds better into gold and silver and other assets. And I'd suggest the same kind of breakup, start with some small stuff and then get the bigger gold and bigger silver bars as you're dealing with bigger quantities of money. But another thing that you can do if you're in one of these latter two categories is look at a product like PSLV. And this is the only time I'd recommend it, because if you are new to silver, you're dealing with all the emotions about the realization that you've made about the system coming down, and you're kind of overwhelmed with how am I going to handle this? get your small amount of gold and silver in your personal possession, your change, your prepping supplies. But if you're dealing with hundreds of thousands or millions of dollars, it's got to feel a lot better, more simpler for you to dump it into PSLV quickly and then do the work later. You're going to be able to feel like you've accomplished, you've moved what money you have moved into, you move it into PSLV instead of any of the other ETFs, because Sprott is just way more trustworthy than these other funds. If you read the prospectus on these other ETFs, they basically get into the details, get into the loopholes, and they say, yeah, we don't have to hold all the silver we say we're holding. Or we can subcontract this vaulting job out to subcontractors, and we're not liable if they don't do what they say they're doing, right? So you get this web of lies, or web of at least risk, that flows out through all these different categories. And the bottom line is you're not protected. You're not protected with real metal and real assets. Whereas with PSLV, I am much more confident in telling you that you are going to be protected, at least in the initial phases of this thing. The problem with PSLV is they are still centralized. They are still centralized, so if a government agency decides to come after PSLV, they're still at risk of having their assets seized. You know, they go through the Royal Canadian Mint, and so if some Canadian politician gets it in his head that he's going to seize the PSLV assets, there might not be anything that Sprott can do about it, right? That's the risk that you run. Right? The big criminal versus the little criminal. Because there's always risks, there's always trade-offs. There is no 100% way to do things right or perfect, right? There is just risk on one hand, risk on the other hand. What's my best way to diversify my way out of these risks? So if you have to do an ETF, if you need it to simplify your life, or at least to get out quick from your existing assets and get it out of your stocks and bonds and into a hard asset, use PSLV. Not any of the other ETFs, because at least you know you're going to get real silver when you get there. You're still at risk because it's a centralized stash of silver, which may be a target for governments. But at least you know the silver is there, and you're not just handing money to JP Morgan or other criminal banks who are, you know, going to screw you immediately instead of have potential tail risk from governments trying to seize your silver. So a lot of the work that the older folks are going to have to do is mental, right? To have to get over the fact that they've lived their whole life in an old system that lied to them, and it's harder for old people to adjust, but they're going to have to do it anyway. And as much as you are capable of doing to protect yourself and to get prepared for the new paradigm, you still need to do it. And if that only means you're willing to do it 10% or 25% because you still believe in the old system, that's still better than doing nothing, right? And maybe you get further down the road and you get more confidence and you realize you were right about gold and silver, and you get in more at that point. It's still better than doing nothing. You know, this is not a 0 or 100% process for anybody. You take your level of comfort, your level of understanding about the system. You take your research that you have done personally and your risks that you are willing to take, and that is the amount that you invest, right? No more than that, because for one thing, you don't want to turn around and immediately sell these products, because you are probably going to take a loss if you buy something and then immediately sell it within a period of months because of the premium that's involved in buying a small physical product like a 1 ounce round or a bar, right? You're probably not going to get all of that premium back. Long term, yeah, you're probably going to get all of it back easy. We're talking about on a 5-year, 10-year time frame, you're golden, right? You don't have to worry about anything. And beyond that, I don't really know what to tell people who are like millionaires, right? People who are have so much money that, I mean, if I was a millionaire, I guess I would have some kind of bug out site. I would probably invest in real estate and have a bug out site, isolated, try to have kind of a self-supporting home with solar panels and a water source and power generation and the potential for food production locally, and have it isolated and maybe even hidden. And then, but don't be too far away from your location, right? Because the airports and such may not be available to you. It has to be someplace you can reasonably get to on your own in the moment that it happens, and you can keep your 1,000-ounce bars of silver that you test properly with sophisticated equipment and stuff there, along with your guns and ammo and food and all your other basic preps that you made. And if I didn't mention the guns part, I mean, I'm from Texas, so yeah, most of us have that down already. But if you're not, yeah, that's going for a high premium right now too. Just go and see what some 9mm goes for. I think it's like $1 a shot some places. I think 60 to 80 cents a shot. 50 cents a shot is like an excellent price, and it will dry up immediately. Same thing for 223, which is AR-15 ammo, or at least the knockoff version of the AR-15 ammo, but you need that too. But yeah, you're going to diversify more into land and farmland and productive businesses that are likely to survive through the other side of this crisis, and probably have positions ready to immediately swap out of your gold and silver and into these productive businesses, which is the whole point, coming out the other side of these situations and then being able to swap into other asset classes in that period of crisis, so that you come out the other side at a higher class level than you were before. You know, if you were a deadbeat, well, maybe you own your own house because of the choices that you make. Or if you owned your own house before, maybe you can own a business. And if you own a business, maybe if you play your cards right, you can expand your business tremendously, right? And this is a once in a lifetime kind of opportunity to make those kind of gains. And conversely, if you do it wrong, you can lose everything, right? People who think they are in big shit and have their house and their business and everything set up, who are completely exposed, are going to lose everything. And their loss is going to be your gain. So that's kind of my broad overview of, if I had to start over from zero right now in different stages of life, at different stages of income, what I would do. This is not investment advice. This is just speculation as to my personal opinion of what I would do if I was starting from zero, or just very recent into these gold and silver kind of minded situation today in our current environment, which is rapidly accelerating. There's really no telling when or how the prices come back down on silver, back close to 27, but the premiums are still sky high, right? So I wouldn't even consider this a pullback. But I hope you find this video useful. Please like and subscribe. I'm trying to get to 1,000 subscribers. I do really appreciate it when people subscribe, and I'm going to make more helpful videos like this in the future. Let me know in the comments if you have any questions, what you'd like to know about. Maybe it'll help me with questions about future ideas for future videos to make. And I hope you're doing well, and I will see you in the next one. This is Silverbusters signing off.